The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. US futures move higher ahead of a holiday-shortened week as investors look to the latest reading on inflation. Minneapolis Fed President Neel Kashkari joining us around the desk at 9:30 CET. You don't want to miss that. Israel announces an investigation into an airstrike that killed dozens of civilians in a camp in Rafah, with Prime Minister Benjamin Netanyahu blaming a technical failure.
Despite our utmost effort not to harm uninvolved residents, a tragic incident occurred yesterday. We're investigating the case. We will draw conclusions because this is our policy.
French President Emmanuel Macron issues a rallying cry against the far right on his state visit to Germany as European elections loom.
Partout dans nos démocraties.
Everywhere in our democracies, these ideas flourish, stoked by extremists, especially the far right. This ill wind is blowing across Europe. It's reality. So let's wake up.
120 business leaders throw their support behind the UK's opposition Labour Party at the head of July's general election, while the Lord Mayor of London calls for a business-friendly approach to immigration.
The nation needs to make decisions about the level of immigration, but we distinguish that from students coming in, we distinguish that from working visas, we distinguish that from kind of temporary business access.
It feels like the quiet before the storm out there. The trading environment, I think, impacted by a couple of holidays stateside and here, but also a very important week as we waited out for more inflation data that the Fed looks at. And it's the last week for Fed speakers before a blackout period is, and we waited out for the next Fed meeting. But already hitting the tape, we've got Mester, we've got Bowman. Later on, we're going to be speaking to Neel Kashkari too. So let's just dive into what we're hearing from Mester. And there's been a lot of soul searching from some of the central bankers lately as to whether they've got the right information before them, whether they're showcasing the tools adequately to investors, to traders, to market participants. And this is where I want to pick up when it comes to Mester today, who has been talking about the virtues of some statements, saying while simpler is often seen as a virtue, it can also be a detriment, since policy making has to be done in an uncertain world, one in which the economy is constantly being buffeted by shocks that can lead to economic conditions to evolve differently than what is anticipated. Mester's been talking about this in pre-prepared remarks for delivery to the Bank of Japan conference in Tokyo, with short statements, each word takes added significance. Also talking about the short statements suffer from what she calls Hotel California problem, reluctant to change a particular word because of the possible signal that may also send a market. So referencing you can check in, but it's hard to check out when it comes to Hotel California. So being wedded to certain words in the commentary. Also going on to talk about, I think, what is highly relevant for other central banks, from the ECB to the Bank of England, that have been also looking at the role of dot plots and providing more clarity. And she's saying another improvement to Fed communication would be the introduction of an anonymized matrix of economic and policy projections alongside the summary of economic projections. All this sounding very wordy, talking about the SEP here, very important because it includes the dot plot, which shows you the cluster of what policymakers' projections are. So effectively saying a matrix for market participants can see the linkage between each participant's outlook and his or her views on appropriate monetary policy associated with the outlook. So suggesting some changes here, saying currently the variables in the SEP are not linked across participants, so not providing a coherent forecast. Again, just suggesting providing more commentary, more colour for participants as they try and get to grips with exactly what the policymakers are forecasting.
Yeah, I mean, Michelle Bowman also speaking then, and I think just really in tandem with what you're getting as well out of Loretta Mester there is really just a sense of, and really just talking about QE and QT actually is what Michelle Bowman really speaks about here. And even just saying that the FOMC would have benefited from earlier decision to taper. Now, we've spoken about this decision before. Was the Fed late in hiking rates then, which ultimately maybe scuppered their fight against inflation? FOMC would have benefited from earlier decision to taper and end Q1 back in 2021, which would have allowed for earlier rate hikes. So ultimately just saying, again, that they would have benefited from doing that. Bowman's also saying that she would have supported either waiting to slow quantitative tightening's pace or a more tapered slowing in the balance sheet runoff. Also making note then that it is important to keep reducing the balance sheet size to reach ample reserves as soon as possible, and more significantly, while the economy is strong. So ultimately needing to do that possibly at this stage then. Also important to communicate any chance to run off rate, which do not reflect a change in Fed's monetary policy stance. Strongly supporting principle of balance sheet holdings, primarily being composed of treasuries. In a longer run, balance sheet tilted slightly towards shorter maturities would allow flexibility in approach. But again, I think just that note then, having benefited from an earlier decision to taper end QE back in 2021, allowing for earlier rate hikes, would we still be in the situation we're in right now, where they have to delay the rate cuts now and in going the other direction?
I want to pick up on the why here, because we're talking more about the framework and a bit of soul searching, and there is a planned monetary policy framework review that the chairman, Jay Powell, has signalled will start later this year and could stretch into next year. So we are hearing some early calls here from Fed policymakers about what they think is important, and Mester sums it up in the terms of her words: use your words and connect the dots. So she's asking for more clarity, but you're hearing the soul searching around QE. Let me stretch it over to the ECB, because similar tone you were hearing from Isabel Schnabel, and don't forget she's been one of the hawks over at the ECB. She's actually been talking in more recent times about whether the ECB should have a dot plot as well, so similar to the Fed. And this gets interesting because you do have various different branches of the ECB that represents countries, a little bit like the Fed that represents districts. So the clarity does come through in terms of their information gathering. Bank of England went down a similar pathway to discuss whether that would be a good idea. Didn't really have the deep knowledge at a district or regional level to be able to do so. But the ECB could possibly, and Schnabel is actually weighing in on QE to Bowman's comments. So she really is also looking at some of the decisions that have been made and whether they are symbolic at this point. So Schnabel's saying QE may have weakened the transmission of monetary policy during the recent tightening cycle. And that's interesting as we talk about the transmission mechanism. This is something that Mario Draghi spoke about for years. So just some soul searching here about the interplay of QE with setting the deposit rate and what impact that's been having as they try to tighten rates to try to get a grip on inflation. So that comment about whether QE has interfered now with that transmission of monetary policy as they've been tightening. Also going on to say, in a bank-based economy, targeted longer-term refinancing operation can provide substantial support with smaller footprint. So just a couple of lines there, but nothing in particular around the pace and timing of interest rate cuts, which is what the entire market is looking for at this stage.
And June ultimately being locked in for the most part, according to the ECB. I just wanted to, just a very last comment very quickly on the Fed then. This is very just notable that Mester was speaking about how having to be tied to particular words in order to not send the wrong signals, because every word ultimately gets scrutinized, every cough, spit, every note. And
well, we do it, don't we, on CNBC?
100%.
So we have the previous statement, then we have the current statement,
and
so what's crossed out,
changed?
what's been replaced.
And for them now thinking, well, this is a problem for us too. We need to maintain certain words. We need to, and then be tied down to that. So has it become a credibility issue? Do they feel tied to certain things and can't change because of credibility? I think that'll be very interesting to note as well in our later on interview.
It puts you in a very much a straitjacket. You can't just be having a discussion in some of these meetings, because what's put into the minutes very much wedding you to a path. For some of the participants. So it's fascinating, isn't it?
And because data does change, it can change. How then can you change your statement? Because people feel like, oh no, but you can't change your statement now. But the data has changed. Maybe that should allow for a little more leniency.
With the hot data that's come through so far this year. But we're going to be talking more about throughout the programme. Now, the Federal Reserve officials do get their preferred reading of inflation later this week, with the PCE price index released on Friday, with economists expecting some modest relief from price pressures. Stubborn inflation has led some banks to pull back their forecasts for the timing and number of rate cuts in the US this year. Policymakers like the Minneapolis Fed President Neel Kashkari have expressed caution over cutting rates too early, even going as far as saying they could raise rates if inflation remained entrenched around 3%. And on a programming note, don't forget we will be speaking to the Minneapolis Fed President Neel Kashkari later in this show. That exclusive interview is coming up at 9:30 CET. Arabile.
Yeah, Karen, so a lot has certainly been happening over the last couple of minutes or so, and we've tried to unpack that for you. We'll continue to do so as well then throughout the show. But let's quickly check in on how the markets are faring. Then it had been quiet trade, of course, with the United States being on that Memorial Day holiday yesterday, the UK also on a bank holiday then yesterday. So not much by way of volumes when it comes to those two markets. But Asia was certainly open yesterday, so you did see a few gains then, a bit of a track back then for the Nikkei going down 0.2% there in this early morning trade. Investors still assessing some of those comments coming out of the ECB just yesterday, with June looking ultimately as that starting date ultimately for the cut in interest rates. But what happens after that is ultimately the big question. The likes of Ollie Ren, Philip Lane all speaking as well yesterday. 0.33% higher though for the Hang Seng index today. Japan's Nikkei reversing yesterday's 0.7% as I've been making note of. Pretty much flat though for the Shanghai Composite so far this morning. Australia's retail sales numbers also having crossed the wires. Onto the currencies then. The dollar's on the back foot for what is a third straight session. Should I say then, of course, we are headed towards PCE data, the Fed's preferred inflation gauge. That's anticipated to come out on Friday. Median forecast there for around 0.3% uptick in the month of April compared to March, keeping the annual pace at around 2.8%. So we'll certainly see if that becomes the case. Then you can see 127.80 then for sterling against the dollar there. Euro dollar sitting at 108.77. 156, still stronger than the 157 we've seen dollar yen trade at pretty recently. It has, however, kept weakening against a slew of other high-yielding currencies. Eurozone inflation numbers also anticipated on Friday. Your opening calls then for Europe. UK back in the mix then, of course, after that bank holiday. Perhaps some catch-up trade as it goes, as it looks like it may head a little bit lower to start off the day's trading. The rest of Europe looks like it might head higher. Of course, yesterday markets did close slightly on the up. Then traders searching for some direction there as well, with the US markets also shut then. As I said yesterday, two key ECB figures throwing their weight then behind rate cuts, particularly in June. US futures then, the markets are set to open out of the United States as well today. Of course, suggestions are that rate cuts could perhaps come a little bit earlier. We did see a bit of softening in that data, but is that locked in is perhaps the key question mark there. Tracking this morning a little bit sideways after the Memorial Day holiday stateside. Investors still awaiting that PCE data. As you can see, an uptick in the futures.
Let's get some clarity on the markets with Jakob Pedersen, who joins us now, Chief Equity Strategist at Silbank. Jakob, thank you very much for joining us. Picking up on your research, and this is the title of your latest piece saying need for earnings surprises if the share party is to continue. We just kicked off the show looking at some commentary from Fed speakers, from the ECB. Have we run out of runway for now, given that the data's been hot and the market's been looking for rate cuts? Have we run out of runway when it comes to monetary policy, and we really do need to focus on the earnings now?
Yeah, well, I think so. I think investors are very much focused on interests, on inflation, and of course a very important part of the market as well. But if we look at what has happened on equities, we entered the year with the expectation of 6 or 7 rate cuts from the Fed, and we're now somewhere between 1 and 2, and pushed very far into towards the end of the year, and that in itself should definitely be a drag on equities. And still, we've seen a stellar start to the year, and we have equities on very high pricing, even if we compare to the period of zero interest rates. So in that respect, I think we need to see earnings expectations and consensus estimates move higher in order for this equity party to continue.
Your point, Jakob, as to whether we're overextended, I can see some red dots on your research. Just explain what the red dots tell us when we look at the return barometer.
Yeah, well, the return barometer on red is an indication that we'll either have very low equity returns or negative equity returns over the next year. So that is my expectation when I look at the broader markets, and actually that is both in regards to the US, Europe, and emerging markets. If we look at earnings and expectations, we've had a fine earnings season. But if we look at the earnings growth, we need to see that more than double actually on a global scale for the coming quarters compared to the first quarter, just in order for equities to get to the consensus estimates. And in that respect, I think that would be difficult. We need to see an earnings acceleration. And I find it difficult to see where that comes from, because it's not like we have an economy that is really accelerating.
Yeah, Jakob, you've made note of two things that I really want to speak about here, and it's really just the postponement of those interest rate cuts that the market had basically taken in calmly. Why and how was that exactly? How did the market just take it in so calmly? In fact, significantly continue somewhat of an uptick then, even if it wasn't the same as Q1?
Yeah, well, in my respect, or in my view, it's like the equity markets haven't really prepared for the fact that zero interests are not coming back. Now we hope for one. We're quite sure that the ECB will cut interest rates in June. But what will happen next? We don't really know. Inflation, and especially if we look at wage growth in Europe, it is quite high. So in no means can we expect rate cuts just to continue, and that's actually the same when we look at the US, where we have inflation readings that are quite a bit above the target. So in that respect, it is not just a firm path of a lot of rate cuts coming, as I see it, but the equities are priced. If we look at the pricing of equities, and then that's not just US tech being priced expensive. It's almost all over the market. We have pricing that are more expensive than it has been for the past 20 years. And in that 20 years, we have 15 years of zero interest and QE. So I feel equity markets are very expensive and will have a difficult time moving higher unless we get some positive earnings surprises. And I find them very difficult to imagine.
Yeah, but Jakob, at the same time, you're still supporting US over Europe on a broader market outlook, right? And
Yeah.
The ultimate claim here would be that US is very expensive, as you've just made note of, but you're still favoring US over Europe. Why?
Yeah, I am. First of all, because you can say that if we look at the US stocks, we have a quite a different stock market today than we've had over the past 20 years, with a huge technology stocks being much having much more weight in this market. So that is one, I think, a good reason for the US market being more expensive than what we've been used to over the past 20 years. But also, I think if we look at the US economy compared to the emerging markets, compared to Europe, we have an economy in better shape. So I think that the disappointment in earnings will be far less in the US in magnitude and in numbers than what we'll see in Europe and emerging market. And that dynamic will play into the hands of the US markets. Even though I'm not extremely positive regarding the return potential in the US, I think it will be better than both Europe and emerging markets, because we'll have better earnings delivery.
Yeah, just to that point, we had NVIDIA numbers out the other week, and there was an earnings surprise, and there was a surprise around the forecast. So does it matter if the broad-based US markets disappoint on earnings, as long as we have about 7 major stocks still surprising us to the upside, thanks to some of the AI story that's been playing out?
No, well, I think we have to be careful. I think it's obvious for many people that the investments in AI are benefiting some of the very big stocks, NVIDIA being one of them. But I think NVIDIA earnings moving a lot of the rest of the market. I think we should be somewhat hesitant in accepting or at least seeing that as the normal, because all of the investments in AI will need to work themselves into the companies and into their earnings prospects, and I think that will take more time. So I think we're in for some earnings disappointments on the overall market moving forward, and I'm not sure that Nvidia and AI earnings will be able to be like lifting all stocks when we move further into the year.
Jakob, we appreciate the warning labels that you're attaching to some of these market trades. Thank you so much for joining us today. Jakob Pedersen with us, Chief Equity Strategist at Silbank. Goldman Sachs has raised its global oil demand forecast for 2030, saying it now expects global consumption to peak by 2034 amid a potential slowdown in EV adoption. The lender's research division now sees crude demand at 108.5 million barrels a day in 2030. That is up from 106 million and peaking at 110 million in 2034.
Now, coming up on the show, almost 30 million South Africans are preparing to vote in the country's general election. That's tomorrow, with the ANC at risk of losing its majority for the first time in 3 decades. Plus, we'll bring you the latest political news here in the UK as campaigning ramps up ahead of the general election. Plus, investors are counting down to that all-important PCE inflation print out of the United States this Friday. We'll be speaking to Minneapolis Fed President Neel Kashkari in an exclusive interview coming up at 9:30 CET.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
Now, Spain has promised to provide 1 billion euros in military support to Ukraine this year and 5 billion euros by 2027 as part of a security deal signed between Ukraine's President Zelensky and Spanish Prime Minister Pedro Sanchez. Now, the pact covers the next decade, calling for the supply of modern military equipment to meet Ukraine's needs. Charlotte has more on this story. Charlotte, President Zelensky has always said he needs more, and he's getting it.
He is. It's interesting that President Zelensky was actually supposed to travel to Spain earlier this month, but he had to postpone because of the offensive in the northeast of the country from Russia being more aggressive there, the front stretching over 600 miles there on the front line. But certainly now that bilateral agreement is signed yesterday, the King of Spain was there to host Zelensky when he came off the plane and also held a lunch in honor of the Ukrainian president. And certainly Mr. Zelensky said that it was a life-saving aid at a difficult time.
I'm grateful to Spain that your hearts did not waver. You helped. You strengthen our Ukrainian force that is holding the front against Russian aggression. And through your actions, you are saving hundreds of lives, of children, women and men in Ukraine.
Now, we didn't get specific details on the package, but according to reports from El País, they will include some US-made Patriot anti-aircraft missiles, as well as some German-made Leopard tanks. And also, all this comes in a context as well that some aid packages from the EU is actually being stuck. We had the European Affairs Minister yesterday discussing and urging Hungary to stop blocking. That would amount an aid package of 6.5 billion euros. Apparently, tempers run quite high yesterday in Brussels during that meeting. Here again, Hungary criticized for walking basically the line of Russia too much. Hungary saying that they just want to encourage peace there. But certainly we see that there's some these packages being stuck there. We know also that the G7 discussed this weekend about potentially using some of the proceeds from some of the frozen Russian assets to support Ukraine. So that's why we've seen President Zelensky try to go for these bilateral support packages. He will be going to Belgium today to sign some of this aid because he says they need this help now. And a lot of these support packages are actually being stuck. And they said this will take too much time where they really need the help right now.
Very important discussions here as well. We'll see how much more actually comes out of this. Charlotte, thank you so much for the time. Now, Spain, Ireland and Norway are set to make their recognition of a Palestinian state official today as part of a plan announced last week. Slovenia could become the next European country to recognize a state of Palestine, with the country's government to make a decision on recognition on Thursday. Israel's foreign minister has accused Spain of rewarding terror, with the move saying its Jerusalem consulate will not be allowed to help people in Palestinian territories.
An Israeli airstrike which killed dozens of people in a camp sheltering displaced Palestinians has drawn international condemnation, with French President Emmanuel Macron calling for an immediate ceasefire, saying there is no safe place for civilians in Rafah. Qatar also condemned Sunday's strike, warning it may hinder ceasefire talks. In an address to the Knesset, the Israeli Prime Minister Benjamin Netanyahu called it a tragic incident. Let's get out to Dan for more. Dan, a lot of international pushback now on the back of this airstrike. Just walk us through the latest developments and the significance too of Benjamin Netanyahu's concession that this was a tragic mistake.
Well, the head of the UN Agency for Palestinian Refugees says Rafah has become, quote, hell on earth. And that is after the images that we saw coming out of this shocking attack at the weekend. It comes after dozens of people were killed in Rafah on Sunday in an Israeli airstrike and fire that tore through an area where displaced civilians were sheltering in tents. They were told it was a safe zone. They simply had nowhere else to go. And the images circulating on social media, I'm sure you've seen, are too graphic to show on television, but they have sparked international condemnation from leaders in the region and around the world. The UAE, Jordan, Bahrain, Kuwait, Saudi Arabia and Turkey all speaking out against this violence, with Jordan actually describing the strikes as war crimes and a direct challenge to the decisions of the International Court. Of course, you'll also remember that just last week, Israel was ordered by the International Court to halt its offensive in Rafah. And across the European continent, reaction as well. French President Emmanuel Macron said he was outraged. Germany's foreign minister also said the ICJ ruling must be respected. And with Israel also seemingly running out of allies, Prime Minister Benjamin Netanyahu is under intense pressure now to explain exactly what's happened. Listen.
In Rafah, we have already evacuated about 1 million uninvolved residents. And despite our utmost effort not to harm uninvolved residents, a tragic incident occurred yesterday. We're investigating the case. We will draw conclusions because this is our policy.
All eyes are now turning to US President Joe Biden and exactly how the United States is yet to respond. We have yet to see a material response from anyone inside the administration. Of course, back in the region, though, you flagged this earlier, Qatar has already said that this airstrike could hinder efforts to reach a ceasefire deal. And that is also critical at this point as well, with those talks to try and bring about some kind of a resolution also back underway at the weekend.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.